record on this. And that will be, this recording will be available afterwards. I'll send you a copy, Rob, and we'll put a copy for our student resources. So welcome, Rob. Thank you so much for joining us from Aussie Home Loans. Rob has Aussie at Moray Field and North Lakes. Award-winning mortgage broker, young Rob is. And I can't remember, was it 10 odd years? How long have you been doing this for now, Rob?
Yeah, almost 10, I think.
Almost 10, yeah, decade or so. There we go. So again, thank you for your time, Rob. We do appreciate it. We love to have people, as Lewis said, experts in the field, and give us some information about what's happening out there in the real world. As all my students know, I was in the real world, but now I'm behind a desk teaching them what happened in my time out there. And it's good to know what the people are doing day to day on the coal face. So Rob and I were having a little chat beforehand. I say to my students that you need to know your numbers in real estate. You just be very good at math to A, be able to calculate commission, because that's what we all want, but B, to be able to calculate what costs are to buyers and what's going on for them. I also actually say they've got to be good at English, because A, they've got to know their numbers, but B, we don't want spelling mistakes in their ads. That's another part for them to do. So on that knowing your figures, Rob, I used to say to people, you know, I just want another 10 grand, let's get another 10 grand. And they'd say, oh, I haven't got it. Well, if you know, you could extend yourself with a bank, you know, it's only going to be X amount per week. So at the moment, looking at current interest rates, Rob, what would 10 grand be a week or a month to a buyer if we're trying to get that out of them?
Yeah, so additional repayments on 10,000 based on, say, average what I think the rates are going to next, about 4%. It's about $50 per month.
Okay, so either a good bottle of wine a month or a cheap bottle of wine each week. One or the other. They're actually very cheap. Probably a bottle of wine.
Oh no, you can squeeze that in.
Squeeze it in. So I have been known to say to buyers, you know, you might just need to give up a bottle of wine a week to be able to afford this. You've got to put it in relative terms for your buyer and make it real to them what you want. I used to always say too that, how long do you plan on staying here? If it's 15, 20 years, or is 10 grand going to be much different in 25 years time? Of course, sometimes I've had people move 100,000, so that's $500 a month then. So a different discussion to have with them. So just talking about it and saying knowing your numbers, knowing your figures, there's some terminology that I want to talk about in the mortgage arena, and that's these, we talk about LVRs and LMIs. What are these acronyms we throw around, Rob?
Yeah, so LVR is basically your loan to value ratio. So it's the percentage of the loan compared to the value of the property. To give you an example, $500,000 property, if you've got a $400,000 loan, the LVR is 80%. Yeah.
And that's what banks are wanting at the moment? Are they still around that 80, or they're happy to lend more?
It varies. So most banks will still go up to 95% from a borrowing, and that's including your LMI, which is the next one I'll discuss. But the main thing about 80%, the benefit is no mortgage insurance, which is no LMI, which is lender's mortgage insurance. Generally getting a better rate at 80%. And obviously, without having to pay the mortgage insurance, you're not having to pay it back through the term of the loan as well. Yeah.
So how heavy is that LMI, that lender's mortgage insurance, on that, for example, that $400,000 loan?
Yeah. So at $400,000, obviously, there's no mortgage insurance on that part. It does vary, and it does vary across different banks. So, and it also varies on buffers of loan size. So there's no real one figure. It doesn't work on a percentage. It works on it works through the buffer of the zones on the size of the value of the property and the size of the loan. So generally, if you're over that $500,000 loan mark, the mortgage insurance will increase substantially.
So there's really something that they need to factor in if they're looking at 5%. It's not a true 5%. That they need on purchase price because that's going to get chewed up with this LMI. Is that correct?
No, it probably gets closer to the 8% plus your mortgage insurance.
Okay, interesting. So talking about now going to loans, how do banks think about, wait a minute, I'm looking at my list here and there's something covering it. Here we go, consider. Do they add a buffer to the existing debts? What do they do with existing debts?
So that comes down to your borrowing capacity. So if you're going to buy, say, your second property and you've already got a mortgage, they don't necessarily just use what you're paying back on the current mortgage. They'll put a buffer on it. So they'll use what they call an assessment rate. Assessment rate is generally the current rate plus around about 3%.
Plus 3%, wow. So I suppose when back in the day when I was paying 9% and I was a hero that I'd locked my first mortgage in at 9% because we went to 18%.
Yeah.
Back in the day, these kids now worrying about going up to 4%. Get a grip. Yeah.
Yes.
What are we paying, Rob? So back then 3% wasn't a lot, but at the moment that's nearly double.
Yeah, well, that's just what they use. That's what they use to assess it. It's not the actual rate they're using, but it's just from a risk perspective. They're looking at rates to go up. That's what they've moved the assessment rate to.
Yeah.
With the buffer, that sort of increased when the rates went down. They actually increased the assessment rate, just to, I think, to allow for a higher risk of rates going back up to where they were a few years ago.
Yeah. Okay. So on that, how does an agent have to assist their buyer to understand existing debts and what they're doing? For the agent works for the seller and is looking after him, but they really should be helping, or how could they help the buyer in these in that process?
Well, it's really giving the guidance. I know a lot of agents do say, have you got a pre-approval in place? The pre-approval just helps so much. It does, the people have already been assessed. It's already been through most of the loan process. So that's probably the largest thing from an agent's perspective, is just to look to see if they have, but encourage them to get their pre-approval if they haven't already. That said, some people aren't in a position to get pre-approvals, and some lenders don't do pre-approvals at the moment just because it takes up time and slows down the rest of the processing of formal approved loans.
Yeah, okay. That's interesting to know. That does lead me to my next question of what is the mortgage industry like at the moment. So some places are just not doing the pre-approval, just bring us a contract and then we'll look at your loan. It's happening out there. Yep, okay.
Yep, some. Yep. Yeah, some who have, there've been quite a number of loans which have slowed down their processes. They've pushed back on actually doing the pre-approvals.
Yeah. Okay. And what's the current time frame for finance to get approved? How long's a piece of string?
Varies from lender to lender.
Yeah.
So, when I know we talk about, I think, the standard industry of 14-day finance from an agent's perspective, we try and encourage 21 just to try and take a bit of pressure off both the seller and the purchaser.
Yeah. And you're finding the banks are meeting that 21 days at the moment?
Some are, like the majority are. We're meeting the 21 days. Okay. It just comes down to what other complications are involved in the application, because no application is the same.
Yeah, and there's always, yes. So when something needs to be more information, then it goes to the bottom of the pile and it starts again. So
yep, that's it.
Get all your ducks in a row first. Bank statements. I know that my daughter has been looking at a loan, and she's been told to cut down all the subscriptions and the Uber Eats and all this type of stuff. So what are they looking for in a customer's bank statement?
Really, living expenses is another factor which can reduce your borrowing capacity. So if you're seeing a lot of expenditure on entertainment and sometimes on undisclosed loans, things like Zip Money or Zip Pay accounts, which banks treat as a liability. If they're seeing payments to those liabilities, they'll want to understand why they haven't been disclosed.
So that's interesting. So you have to disclose all of your Afterpay.
Afterpay, all of those.
Ah, interesting. Okay, I'll be telling my daughter that one. I've always told them don't use it, but whether
Yes.
they listen to me or not is another thing. So with those interest rates, we may have covered this, but how do they affect the borrowing capacity with this buffer that they're putting on?
Yep. So it's the same. Every time interest rates go up, your borrowing capacity is going to drop.
Yeah.
Simple fact is the assessment rate they're using, if it's the current rate plus your 3%, the assessment or the repayment they base the loan repayment on is higher. So that liability is higher, means your borrowing capacity is going to be lower.
Yeah. So going back to pre-approval then, if somebody's got a pre-approval which lasts, does it still last, what, up to 6 months? Or?
Some 6 months, yep.
Yep. So you've got a pre-approval and you've got a 6-month time frame and the interest rate goes up 6 times over that period, which is what's happening at the moment, month by month, we're going up.
Yep.
At the end, if somebody's buying a property at 5 months into that 6-month approval process, but those interest rates have gone up, does the approval still stand? Or are they going to honour it?
Yep. So some lenders will still use the rate which is used at the initial assessment, while others will use the new assessment rate. So yeah, it can be tricky in that regard, because what you thought you could afford 6 or 5 months ago, it might not be achievable now.
Yeah, absolutely. I know sometimes I've had buyers come through and I ask them that question, have you got your pre-approval? And they say yes. And I say, so did you go through a broker? Or how did you get your pre-approval? Oh, no, I did that. I jumped online and I just put my figures in. You know, that is not a pre-approval.
No, that's it.
Get the letter.
Self-pre-approved.
Yeah, self-pre-approved. I haven't put in all my afterpays or all my Uber Eats and everything else that I have. So just for our students, if somebody says they have pre-approval, just check. Is it, you've approved it yourself or you've got a letter saying you're approved for this amount. Guarantors, this is one that's come into play really over the last few years. So how does a guarantor work? If mum and dad are guaranteeing, 50 grand, and mum and dad have to go and drag that 50 grand out of their mortgage and contribute, or how does this all work?
Yep. So we do a lot of guarantor loans just because it's just so beneficial for the purchaser. It basically means when you've got a guarantor, you don't necessarily have to have savings. Obviously, the banks want to see that you have been being able to have some savings and be able to afford the loan. But if you've got that guarantor, they're using part of the equity in their property to be secured against the loan for the we'll call for the kids.
Yeah.
Now it's a limited guarantee, so they're not guaranteeing the whole amount of the loan. And if we go back to that $500,000 say purchase for a first homeowner, $400,000 would be secured directly in the kids' names, and the costs on a $500,000 property, so another $5,000 given for first homeowners. So I'm allowing for no stamp duty. The guarantors are basically having a loan for $105,000 secured on their property.
Right. So how does that work then? That goes against the kids' loan for them to make the repayments on the 105?
Yep. So the loan's still in the kids' names.
Yep. It's just the security.
Yep. So the same as the security, but and even the loan on the parents' properties, that's still in the kids' names. It's just that it's being guaranteed by the parents. Obviously, if something happens, again, it's a limited guarantee that the parents could be liable for that $105,000 loan.
So they don't have to actually physically draw out that, like put their hand in.
No, it's not a cash. It's just really using the security of your own property. And obviously, to use that security, there needs to be sufficient equity in the parents' property to be able to use that.
Yeah, that's another point to come across. So what's the repercussions here? We've got these interest rates rising at the moment monthly, and they're predicting through until probably Christmas that will keep happening. And people are just applying to lenders with the lowest rates, like jumping in the highest. They're getting these cashbacks and rebates with stuff that's out there in home loan land. What's the repercussions of that?
It's more around about the time frame that banks are taking to then assess loans, because obviously if you've got every every application going to one lender or over a couple of lenders, they do get a time when they reach a full capacity, which is then going to reach, push out the timeframes of when they're going to be assessed.
Okay, so you're saying that I suppose that's the old adage that cheapest isn't always best, isn't that they could drag the chain?
Yeah, well, again, we look at what's suitable for the customer, and if it's, if we need to have a loan assessed by a certain period or be approved by a certain period, it might not be the cheapest rate. It might be what's most suitable. Again, most of the lenders are pretty similar in rates at the moment as well. So it's, it might be a 0.05% difference.
Okay, interesting. So I think we've discussed this one. Just next on my question is it important for people to have a pre-approval before signing a contract? But then you're saying some banks are not doing the pre-approval process. Yeah. So I don't know what to do there. Should we just always still ask if they've got a pre-approval?
Look, if people are in the market, I think it's always beneficial to try and have the pre-approval in place. Again, that pre-approval doesn't lock you into that bank. Situations may change from when you're ready to buy and when you actually buy, or rates might change substantially, but it does assist so much in meeting those finance timeframes.
Yeah, I know myself. I've had so many that you're at the mercy of the bank. Really, you really need a good broker.
Yeah.
Somebody like yourself to be able to go into bat for the client with the bank.
Yeah, definitely.
Yeah, you guys seem to have a lot more weight with the banks than just somebody who's ringing up saying, the time is ticking.
Yeah,
I need it done. So all banks, are their policies the same? Their lending criteria? Why are they different?
They all have different niches. So you talk about some lenders, and most of them are different policies. You talk about, say, self-employed. Like most banks will want to look at 2 years of people's self-employed tax returns. There's a couple who use 1 year's tax return. So, sometimes depending on what the financial situation has been over the last couple of years, that may guide you to one of the banks who will only accept a 1 year tax return. Okay. Also, things like using rental ledger as to substitute genuine savings. So if you're being rented through a real estate agent, you don't necessarily have to have your genuine savings in place. And I talk about genuine savings when you're borrowing over, say, 90% of that value of the property. Banks will want to see you have 5% genuine savings. And if you don't, some banks will then allow you to substitute that through a rental ledger.
That's a great improvement that I've seen happen over the last few years, really, and assessing that ledger as genuine savings.
Yeah. You've still got to come up with the funds to complete, but it just means that that could come as a gift, but it doesn't have to be genuine savings.
Yeah, whereas the gifts used to have to be in the bank for 6 months or something.
Yeah, 3 months.
3 months, yeah. So we hear a lot these days about credit scores and different companies that you can get your credit score and it's 890, and I have no idea what all these numbers mean and what they use for.
So credit score at the moment is really critical to applications. Over the last couple of years, banks have now got access to your credit file, but they look at this comprehensive credit report, and that's looking at, because every time you make an application for credit, it's going on your credit file. Every time you have some credit, and again, it's getting closer that all liabilities would be showing on your credit file. But if you have missed repayments, that's showing up on your credit file. And if you're missing it by 2 months, that just, one, it reduces your credit file, but it also reduces the bank's appetite to want to give you a loan.
So going back to our afterpays and zip pays and things, are they coming into credit scores?
They're not coming onto your credit score at the moment.
Yep.
So, but what they are seeing, if you're making repayments through your bank statements, that's where they'll pick those up from.
Okay, they're picking credit scores.
And probably just a bit more in the credit scores. The other things that really does impact on your credit score can be applications of things like cash converters. So they're the things that will really reduce how much you can borrow.
Yeah. And what about if you just put in an application for people trying to buy new cars? They've put in an application, but the car isn't available, so they haven't gone ahead with it. You know, does that type of thing affect a credit score, that there's been application?
It'll go on your credit score. Certainly, any application will impact on your credit score, whether you proceed or not. It sits on your credit file for 5 years.
Yeah. Okay, interesting. I actually had that happen to one of my daughters recently. They exactly that scenario. Put forward an application for finance for a car. Couldn't get the car into the country, so they went to a different vehicle, and through that finance company, they said, "Oh no, you're being rejected because you've already applied for finance."
Yes. Yeah, I had one client when I was sitting online and just looking at offers for credit cards and filling in applications. I did 4 over one night, and they came to see me about a home loan the next week, and I said, "Your credit file is not great just because of that."
Oh wow, interesting. Yeah. So going back to helping our buyers, I suppose there's a fine line of asking them for their credit file and their blood group, but it is being able to assess that they're genuine, and that I think that pre-approval is the thing that is going to help us assess from a sales perspective that they've got their ducks in a row, really.
Yeah.
Yeah.
And again, most people, some people obviously haven't got to that pre-approval stage, so it's not the be all and end all, but it just helps.
Yeah. So when you're saying that some banks aren't doing that, have you got a percentage? Like, is it half of the lenders out there, or just 20% of them that are not?
No, I'd say probably more on the 20% mark.
Okay. So there's still plenty offering that availability. It's really turned, hasn't it? I know when COVID hit and we were smashed in the industry, we were having buyers that were bringing 3 and 4 valuers through, because the bank were offering all free valuations, and it was just a nightmare because they're just throwing valuations out to any banks for lending. Whereas I assume that has now turned, and there's no more free valuations.
We get free valuations through our lenders.
Oh, you do?
There's only 1 or 2 that we don't.
Yep. Okay. That's good news.
Yeah.
But typically only when you put the application in with that lender. And are you still just submitting to one lender if you've got a client, or?
Yeah, generally we talk to our clients, and we want to choose the most appropriate lender at the start. Obviously, more applications are going to impact on your credit file, so that's why we try and just stick to the one. Yeah. Sometimes, for whatever reason, there might be a need to go to a second lender.
Yeah. Yeah, and it's interesting, as you're saying, the bank's criteria. Sometimes they'll be not approved in one, but you can get approvals for another lender. So.
And that's it. And sometimes it can be the valuation. Not the valuations will come back different. Depending which value is assessing the property. More on refinances, we look at that, because sometimes people are trying to get equity out of their property to purchase another property, and they're trying to get the most equity out, and therefore we might be doing 3 valuations to see which lender is going to be give us the most equity. Yeah,
absolutely. And I've come across that definitely myself out there, that I know what valuers will give me the valuation that I need, and when they send me through a valuer and I know they might be a bit of a hard taskmaster, I'll ask them to send me another one.
Yep.
Rejected him, give me the next one. That's something from a sales perspective. Once you get to know the valuers that work in your area, you can reject it and get another one. I've done that when they've sent them through. I might open it up to, and I don't know what's happened to Paul. He was going to join in with his class, but he hasn't jumped online. I do have quite a few people missing, but we are recording it for them. Anybody in Zoomland have any questions for Rob? If you just want to type it in the chat box for me, or you can just unmute. We haven't got that many people online, actually. You can type it in the chat box, and I'll just talk about the poll that I've got. You can click on polls, a little quick poll about information that was covered and anything else that you're wanting to see covered. What else do we need to know, Rob? You know, these interest rates keep going up, and just in the banking sector, it doesn't seem to be feeding through yet to the other side of interest rates on investments. We don't seem to be seeing that increase yet, and yet we're seeing, you know, mortgages increase.
Yeah, look, I think that will that will happen. You know,
It will feed through.
if it hasn't already, I think that has started to come through.
Okay. I know my poor mother, who's a self-funded retiree, is always crying poor that there's not enough money in the bank, not enough in the bank to get it through. Is there anything else, Rob, that you can think of that we need to be aware of just in the marketplace of or for buyers or even sellers? You know, so not pushing buyers too hard, I suppose, on that time frame. You know.
Yeah, I know. I get a lot of feedback from my, some of my clients saying, "Oh, look, the real estate's ringing me up. The agent's ringing me again. The agent's ringing me again." You know, the customers are buying property. It's one of the largest things they do in their life, and it's really stressful for them as well. And it's just being aware that, you know, putting pressure on them just is not helping their stress. So it's just trying to act. You know, if you need help or need assistance from as far as the loan processing goes, maybe ask them if it's okay to talk to their broker.
Okay. Yeah. So you'd be happy to talk to an agent if, you know, they jumped through the hoops and the client had, I mean.
Look, we have to give updates to agents sometimes, because obviously you know, the seller's worried, the seller's trying to sell their property, they might be trying to buy another property, or they've got something else happening. So it's, you know, we're just trying to keep everyone in the loop, just trying to make sure that everyone knows what's the situation that's happening. We're all trying to get results for our customers, and just try and make the process as less stressful as possible.
Yeah, exactly. I mean, it's a common goal at the end of the day, isn't it?
That's it.
You want to get paid, you want the finance to go through so you can get paid. We want the house, the finance to go through, the settlement, so we can get paid, and we want to look after our seller that's engaged us to help them move on to whatever they're doing. So I think we all need to work together and see each other as all on the same side, really, to get it done. Well, I don't have any more questions. I think I've covered everything that I wanted to. Are there any other points that you want to bring up, Rob?
Not at the moment. Again, you know, if people need to have any questions, you're more than welcome to give them my email address, and I'm happy to respond.
Rightio, I might do that. I was just going, I'm just looking at my phone. I'm going to talk about, I don't know if Aussie have one. Do Aussie have a home loan app or any calculators that you can put on your home screen?
The online ones.
Yeah.
Which again can be a little bit different than what the banks are using.
Yeah.
Depending what information you're putting in.
Yeah. Because there's one that's, I often go into, there's repayment calculators you can have a look at. And again, if you're asking people for another 50 grand, if an agent was just to put 50 grand in there at 4% at the moment over 20 years, would that give him or her an indication of what sort of repayments he could say to the client? Look, you know, another 50 grand, it's just going to be looking at being this amount. Would a quick repayment calculator help him work that out?
Yep. And again, you know, the rule of thumb we used before on 4%, 10,000 was about $50. So,
I just multiply it out.
Yeah. So on 100,000, you're looking, it was around about 480 on 100,000. That's based at 4% interest rate.
Okay. So just under the 5. So it's not quite the 5 for the 100,000. Because as I said, in negotiations, I have used that. So it's something that to be aware of. You've got to know your numbers to be able to help that buyer through the thought process to get to the end. And you made a good point. This is their biggest purchase they're ever going to make in their life. So we need to help them step through that thought process to get to the other end. Good old sales techniques. Okay. Well, if nobody's got any questions from the gallery, I can see some people filling in the poll here. I will, as I said, I will save this recording. I'll send you a copy, Rob. I'll pop it in our Facebook group for those students. And if you're not in the Facebook group, jump in and find it. It'll be prepped under their page. There'll be a separate group for students. I'll pop it in there, and I'll also share Rob's email to everyone who had booked, as well as just those who attended. There's a lot of people who have booked but not attended, so I'll send your email, if that's okay, Rob, to all those people. So
that's fine, perfect.
Okay, if they've got any questions, they can reach out. And I'll just see if there is. There's somebody's put. I'd like to know more about, but until I end the poll, I can't see what that question was. So if anybody in Zoom land wants to pop in the chat, if there's another anything else that you want to know about, I'll just see if anyone jumps in there for that. Because I've got a little poll there saying, yes, I would like to know about, and fill in here, and I can't see it. Technology, it's good. Good when you can understand how it's going to work. But somebody has jumped off, so it could have been a person. Oh, here, what's the name? Oh, Rob. So it's Rob Callander, and he is at, so Teague has asked, what's your name and company again, please? So it's Rob Callander, and I'm going to put it at Aussie Home Loans. Actually, I'm just going to pop it in the chat for everyone. What's your email address, Rob?
So it's robert.callander.
E-N-D-A-R?
A-N-D-E-R.
C-A-L-L-A-N-D-E-R. Yep.
At Aussie.
Yep.
.com.au.
And what's your phone number, Rob?
0474.
Yep.
225.
Yep.
871.
871. So I've popped that in the chat if anyone wants to copy it from there. As I said, I will also flick it on an email afterwards. Okay, that's all from me. If anyone, I've asked a few times for questions, we haven't had any, so I think I'll leave it at that. Thank you, Rob. We do really appreciate your time. And as being one of our speakers, Rob, we have an annual awards, and for the people, our attendees, the annual awards for PrEP this year is on the 26th of November, so we would like to extend an invite to you for that. And I will send you all the details, but just a little verbal on it. It's at the Brisbane City Town Hall, so they'll light it up in our colours, and there are about 500 real estate agents all doing their thing there. They can come along and fly the flag. Last year we raised just short of $75,000. We raised 74,000 something for charity. So it's a big charity event. Big auction, lots and lots of things going on. So it is a huge night. So we'd love you to come along, Rob. Bring your beautiful wife along too. We might have a wine or two together, Mrs. Callander and myself. That'd be good. Yeah, if you can see yourself free for that, we'd love to have you along. And you'll get, you know, as I said, there'll be 500 agents there that maybe, who knows, we might be able to pass out some Aussie home loan cards amongst them all.
Yeah, definitely.
Excellent. Okay, well, thanks, guys. If you can stay on, Rob, I'll let everyone else tune out. If everyone wants to leave, that would be great. Thank you all for coming along, and I'll stop the recording now.